I'm Deborah Borchardt, and this is your midday market update. Happy Halloween, everyone. Right now, we're trading down just a bit on the Dow, but it does look like we're starting to trim those losses here. And then we've also got the S&P 500 down and the NASDAQ. It's up only slightly. So what's going on today? Well, we've gotten some earnings out and not so good on some of them. We had Starbucks, which was down on their revenues, and then we have Visa that warned about their consumer spending. Joining me now is Mark Newton. He's the chief technician over at Greywolf. So, Mark, it's a little troubling to see that this is happening, that we've got, Visa saying that consumer spending is weak. Visa's always the one that hits the home run.
Right. You started to see a gradual sign of deceleration in earnings really over the last couple quarters, and so that trend has been ongoing. And just recently, the economic data has also come in weaker than expected. If you look over the last few weeks with payroll data and PMIs last week, today's was a little better than expected. But in general, the trend in economic data and earnings have been, I think, not as good as expected.
We had been trading up based on the Fed not easing, but now that seems to have worn off. It seems like everybody's kind of pushed past that. Are we going to see more pullback here?
I think we will. We've been up 13 out of the last 15 days. The market definitely seems to have stalled out. If the small caps are any indication, yesterday had an outside day on both the NASDAQ Composite and the Russell 2000. And these are important because these indices led us the whole way up, and now they're showing signs of stalling out and moving to the downside. The Russell 2000 closed at new 5-day lows. So it's going to be difficult, I think, to push further, given that there's really no catalyst in the immediate future for investors to lean on. And we've moved a long way very quickly. There are a couple gauges of sentiment that I looked at recently that are a little bit of a concern, and one is the spread between bulls and bears. If you look at Investors Intelligence, the percentage of bears has dropped down below 20% again. It registered 16.5, which is the lowest we've seen in almost 2 years. So there's a large percentage of people right now, at least with regards to market sentiment, that are fairly optimistic and thinking the market can simply roll into year end. Another thing is the options marketplace is also pricing in a lot of complacency. There were articles earlier this week about the put skew, which has started to flatten out. Basically, more calls right now are being bought than puts. And typically, the puts warrant a greater premium and percentage when you see lack of demand for put options and more for calls, and it starts to flatten out a little bit. Historically, that's been a topping sign for stocks. It happened in May and also in September, and so that's something to keep your eye on. The VIX also, after being down almost 40% in the last 15 days, is gradually starting to stabilize and turn higher. So regardless of the fact that the indices really aren't making any progress to the downside, there are some indications that we could be at least on the verge of a minor pullback that might begin as we start November.
All right, well, there you have it. Mark has given you some signs that things may be topping out here. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.